Hello everyone and welcome to our weekly global market outlook. I'm Tolga, here to guide you through the latest happenings in finance and what to keep an eye on in the coming days. This week we saw US equity markets inching closer to record highs, inflation numbers that just won't cool down, and a surprising economic beat from the UK. Looking ahead, we'll explore what's next for housing data, the Federal Reserve and several global central banks. This overview is designed for finance professionals and market enthusiasts who need concise, high-level insights. Let's dive in. Near record highs in US stocks, US equities had a great run with the S&P 500 and NASDAQ both bouncing back after a couple of weaker weeks. The S&P 500 even came within a few points of setting a new record, while the Dow and the NASDAQ are hovering about 1% below their own all-time peaks. Inflation staying hot. Last Wednesday, Consumer Price Index report showed core inflation at an annual rate of 3.3% for January, slightly above estimates. Fed Chair Powell, in testimony to Congress, hinted that the central bank won't be rushing into any more rate cuts until inflation cools in a clear, consistent way. Retail sales dip. US consumers pulled back on spending more than many analysts expected. Retail sales dropped 0.9% in January, marking the biggest monthly drop in a year. That figure has some economists concerned about how much the consumer will continue supporting economic growth. European stock strength. On the other side of the Atlantic, European markets are off a stellar start in 2025. Abroad, European index is up over 12% so far this year, leaving the S&P 500's around 4% gain in the dust. Key drivers include corporate earnings that are beating expectations and renewed optimism around geopolitical tensions. Precious metals rally. Gold stole the spotlight again, soaring to an intraday record of $2,964 an ounce before slipping back a bit. Silver also rallied above $34 an ounce, its highest in more than a decade, as investors continue to hedge against macro uncertainty. Strong earnings. Earnings season is nearly wrapped up, and the results have been better than many were expecting. S&P 500 profits are now on track to grow almost 17% year over year, compared to the roughly 12% predicted before companies started reporting. UK GDP surprise. Over in the UK, new data showed a 0.1% rise in GDP at the tail end of 2024, beating forecasts that called for a flat reading. This news comes just a week after the Bank of England trimmed its key interest rate by another 25 basis points. Now let's look ahead to the next few days and what's likely to drive the markets. Monday, US markets will be closed for President's Day. Expect lighter trading volumes globally. Tuesday, all eyes turn to Australia, where the Reserve Bank of Australia is widely expected to cut interest rate by 25 basis points. Softer inflation and slower wage growth seem to be the main reasons. In the US, the housing market index will give us a sense of builder confidence and the overall health of the housing market. Wednesday, the Federal Reserve will release minutes from its late January meeting. Investors will be sifting through every line for clues on how close we might be to another rate move. Plus, US housing starts data will give more insight into construction activity, a key part of economic growth. Thursday, we will get the Conference Board's leading economic index, which helps gauge the economy's future direction. Also, the weekly US jobless claims figure continues to be closely monitored to see if the labor market is tightening or loosening. Friday, the final University of Michigan consumer sentiment reading arrives, highlighting whether inflation worries are weighing on consumers' outlook. Existing home sales numbers will also be released, adding more depth to the picture of US real estate market. Lastly, keep an eye on flash PMIs from regions like the UK and the Eurozone. These early signals often show where economic momentum is heading in both manufacturing and services. On the political front, investors are finding reassurance in the possibility that negotiations could soften the impact of President Trump's proposed reciprocal tariffs on US trading partners. In addition, reports about a potential Russia-Ukraine peace agreement are bolstering market sentiment. On Saturday, news emerged that US and Russian officials plan to meet in Saudi Arabia to discuss a future summit. Meanwhile, in Europe, Germany is set to go to polls on Sunday, just 1 week from now. And that's it for this week's recap and preview. We are seeing a balancing act in the markets. Stocks are near record levels, but inflation remains a concern and consumer spending is showing signs of slowing. The direction the Fed takes alongside other central banks will remain top of mind in the weeks to come. If you found this overview helpful, please give the video a like and share it with your colleagues and friends. Also, don't forget to hit that subscribe button so you can stay informed on the latest market moves. Thanks for watching, and I will see you in next week's Global Market Outlook.